Hello everyone, welcome to another video with Professor Choi. Today we are going to be talking about how to set up graphs for stocks, and this is going to be my first video of a few of those to figure it out. Before I start the video, remember that if you like my videos, please click on like and also subscribe. These are basically signals to me that you guys are interested on the topic and that you want me to make some more videos. Okay? So again, today we're going to talk about how to set up your own graphs for stocks and maybe a little bit about interpretation of those graphs as well. Now I have to use a public site online in order to teach you this because proprietary stuff is probably not useful to put on YouTube. So we're going to go to Yahoo Finance, which I have been using for quite a while, and I find it very useful. So when you go to Yahoo Finance, you come to this page, and then right up here you could probably start typing any stock. So let's just take a look at the stock, for example, of AT&T, ticker T. Alright, so one of the things that we did before is we already talked about what are all of these things over here, what do they mean, and now we're going to be talking about this chart option that you get here. And it's going to take a while because there's a lot of ways in which we can set up those charts. So if you click right here, it says chart, you're going to get this really cool chart that you see. And I've already kind of set up a few indicators here in order to have my chart ready for you guys. Now, let me also try to get a chart that doesn't have anything. Alright, so there you go. So let me start with the chart that I already have set up here. So this chart, as you can see, in many ways is already a fairly complete chart for analysis, or a little bit of analysis of the stock and how it's doing and the trend and so on. There's things that you could actually put on the charts, things like are they paying a dividend and how much and when do they pay it. There are things you can put on these charts like Bollinger Bands, which is this band you see right here. There are things you can put on the chart like how do you want the color of the graph to be, and do you want the indicators to look green when they go up or red when they go down, stuff like that. So in this video we're just going to set up a basic chart and then kind of think a little bit about what are some of the things that we need to put on this chart. Alright, so up here up here on the options for the chart, we have indicators. These are very common indicators. So we got moving averages, all different types of moving averages. We got the Bollinger Bands, we got the RSI, and then they have all these other indicators you can use as well. It will take quite a long time, by the way, to explain every individual indicator, so you basically have to figure out which one you like. You learn this stuff in statistics or now the most used indicators really are right up here, so I'm just going to focus on some of these that are the most used. When you come over here, one of the useful things that people like to do is compare the is your stock doing compared to other things such as the S&P 500, the Nasdaq, or the Dow Jones. So you can actually add, basically, together with your line, you can add the S&P 500 to it, and that way you have your line and then you have also the S&P 500 next to it, so you get an idea of how this particular stock is performing compared to the S&P 500, which is an index. Now another useful feature of these graphs that we can use today because the computers are so good is that you can actually just change the time period fairly fast by just clicking up here. So you see the price of stock in the last 6 months. This is the price of the stock year to date. This is 1 year from the moment that you're clicking, 2 years, 5 years. You can even have a custom date range. Now, when you get to about 5 years or so, the graph starts looking kind of ugly, so usually it would not be useful any greater than that. But anyway, the point is that you can switch time periods fairly quickly up here. Now, the next thing you could do here is you could change the interval of how the price is being given to you. I'm pretty sure some of you guys have looked at the prices for stocks and you've noticed that they move pretty much every second. So for a lot of these graphs, sometimes you don't want to set up every second, maybe you want to set up a day. So usually when the larger the time period, the larger the interval that you want also for that graph over there. Now right up here, this gives you an option of setting up the line in different ways. So if you click line, you see the line that you got. If you put area, for example, it will look like this. If you click on candle, it will look like that. If you click on halo candle, it will basically just look empty inside. If you click on bar, it looks like that, but it has no color. And if you click on color bar, which is the one that I prefer, you get that. Alright, now let's just stop right here on color bar and let's take a look at what it's telling me. Alright, so if you have this bar here, the entry point, which is basically the price at which it opened up for the day, is this price that you see right here. And then it will be green if you have the other exit point higher than this. So basically, if you have entry and then exit point for the day on the price up here, it will be a green bar. Now, the wiggle for the day is basically the entire bar. So the market opened at this price on that day, or again, it doesn't have to be day per se, but it could be a different time period. In this case, it's day. All right, but basically for whatever time period, this is the beginning, this is the end, and the entire bar is the wiggle. So in the case of AT&T, for example, it started at around, let's call it 29.60 or so, and then it ended the day at around 30, but then it went all the way down to say 29.40 to about, it looks like 30.10 or something like that. So basically, this whole price up and down was the entire change in price for the day, but then it started here and it ended here. All right. Now, after hours, it moved. That's why you see that it went from here to here. So that's kind of like the movement after hours. And then over here, this is where you start for the day, and then it ended up lower. That's why the bar is red. Okay, because it dropped the price on that day. Now, of course, again, the wiggle or the volatility on the price for the day is the entire bar. And that's really what you're seeing when you see these bars. Okay? So again, you could have a color bar, you could have a bar, you could have a halo candle. Alright? And again, in the candle, you get the start price, the ending price. If it's green, remember it's start, end. So it went up. Okay? If it's red, it means started, ended. And it's red, so it went down. Okay? So if you like the candles, that's what you get. If you like the filled candles, that's what you get. If you like the line, I don't like the line anymore because, as you can see, it doesn't tell me the wiggle for the day. Alright, so I like these color bars for me. Alright, so next thing we're going to do is we're going to take a look at some of these indicators. So one of the most useful indicators is basically the moving average. Now, let me try to explain what the moving average basically is, and I think I have to go back to statistics a little bit to explain that one. But I'm pretty sure most people are familiar with how do you calculate an average. Okay? So the way you calculate an average, let's say we have 10 periods. And let's say that we have 10 different prices because we have 10 periods. So there was a price at 32, there was a price at 40, 35, 39, 51, 22, 33, 41, 61, 25. Okay, so let's say these are all the different prices of a stock, so we have all these different periods. In order to calculate an average, the way we would do it basically is we will take all of these, add them up, okay? Sorry about this, we didn't need that. All right, and then we will divide by the amount of periods, which in this case is 10. Okay, and then we have our average. Now, what exactly is a moving average? Well, moving average, basically what it is, or what they call a simple moving average. What it basically is imagine that these are all the different periods. 1, 2, 3, 4, 5, 6, all the way to 10. Okay, so if you have a 10 period moving average, then what it's going to do is it's going to take the last 10 periods and it's going to create an average for that. A simple moving average, what it basically does is, if the next day it's say 31, then it will drop this period here and calculate the average with this number. All right, so the next day after that, that's why it's called a moving average. Okay, say the next day after that is a 32, all right, then it will drop this number here and calculate again another a 10 period, but it will calculate it with the new number. All right, so that's what is called a simple moving average. Okay, now a simple moving average is really useful because it tells you a lot about the direction of how a particular stock is moving compared to the average, which is really the sort of longer period. All right, so in the stock market, they like to use all these different averages to explain different things. So a 200, for example, a 200-day simple moving average is considered a sort of long-term indicator of how a stock is behaving, with a 50-day moving average being another kind of like medium-term indicator of how a stock is doing, and then a sort of 10-day simple moving average as being a sort of short-term indicator of how a stock is moving. Now, if you're looking for trading, for example, most people would use indicators on the shorter end, and if you're looking basically for long-term movements, then people will look for indicators on the longer end. All right. Now, a really good indicator of how a stock is moving on a day-to-day is usually the comparison between the 5-day and the 13-day moving average. And this is a really strong indicator in order for people to trade. Okay, so let's try to set up some of those indicators back on the graphs. So we'll come over here, and I'm going to click right here where it says moving average, and I'm going to set up my 200-day moving average. I'm going to put a really dark red color. All right, now the 200-day moving average indicates again the last 200 periods and how this stock is performing in the last 200 periods, or in this case, since it's set up in days, and it's the last 200 days. All right, so this is a graph for the year, for 2 years, sorry, 2-year graph. This is a 5-year graph, and not 200. All right, now with that, let's just set up also a 50-day moving average. And I'm going to put orange. So that's a 50-day moving average. All right. Now notice that you start seeing sort of relationship between this red line and this orange line. So in other words, you see a relationship between the 200-day moving average and the 50-day moving average. Okay? So notice that if you see that 50-day moving average crossing below the 200-day moving average, like right here, it seems that that stock is going to keep going down for a while. All right? Do remember, by the way, by the time the average is crossing, then the stock price is already down here. So you got to be mindful that the average is a lagging indicator of the actual price of the stock. But once you see a stock, and notice the prices of the stock basically are kind of like hitting that 50, and they just keep going down after they hit that 50, that is not a good sign. It's usually a sign that that stock is on its way down. Another cool thing, by the way, by Yahoo Finance, we could draw right on it. Okay? See? With the drawing right on it. Alright, anyway. So notice also, by the way, that when the stock crosses at 50, when it crosses that moving average, is also an indicator that it may continue to go up for a while. And that's really what those averages are used for. Now let's set up another moving average here. Let's set up a 10-day moving average. We call it green here. And there we go. Alright, so this, what you see right now, is basically a sort of long-term analysis of the behavior of this particular stock. And take a snapshot here so I can play with this graph a little more. Alright, so what you see right now basically is the stock of AT&T in the last 5 years. Okay, and what we're doing right now is we're trying to figure out if these lines can tell us anything about the behavior of the stock. Now, as you can see right here, by the way, this is when AT&T pays a dividend, and this is one of the reasons why a lot of people like to hold stuff like AT&T, even though the graphs don't look good sometimes, is because they pay dividends all the time. So I don't really care where the price of the stock is going. You just want to sit on your dividends and get paid. All right. So anyway, but if you're looking for the movement of different stocks, okay, then notice that when this line, this is our 10-day moving average, crosses below our 50-day moving average, that's a bad sign. It's usually a sign that the stock is going to continue to move down. Now, another bad sign is when the stock tries to recover, like right here, but then it hits that average, and then boom, it drops again. And then it hits that average, and boom, it drops again. And then it hits that average and drops again. This is not a good sign. This is obviously a sign that the average is being used as a ceiling for, usually for robots that do a lot of these transactions. All right, now let's take a look at it down here. Now, one of the things that you need to learn about bottoms, by the way, is that they usually bottoms on a stock are flat. I mean, literally, they're like bottoms. So, as you can see, this seems to be a pretty long-term bottom for AT&T stock. Somewhere around here, someone is buying every time it kind of gets there. Okay? So, now let's take a look at this period right here. So notice that this 10-day moving average crosses above our 50-day moving average, and then now all of a sudden the stock takes off. All right, so this is a downward trend, very clear, very obvious. It's using the the 50-day moving average as a ceiling. And then over here, when you see it breaking that ceiling right around here, this is a bullish signal. Okay, this is a bearish signal over here. When the actual stock price crosses below, then it hits that and it comes down, hits that, it comes down. This is a bearish signal. It means it's selling off, coming down. All right. Now when it gets to this area here, there's a bullish signal, and usually a signal to get on it and hold it for a while. All right. And then you see this sideways motion here, and then of course in the particular time period that we're in, you always have to think about news, by the way, at some point. So this is the COVID issue that happened in 2020 in the United States. So this is COVID 2020, somewhere around March is when it all started. All right, but now notice that this particular stock has now reached this really long-term bottom, and as you can see here, it's starting to do this move. Now, of course, it's impossible to draw a particular line, but there is an obvious upward trend developing around here, and this might be the beginning of another upward trend. Now, of course, as you can see, it's a 5-year graph. So what I just gave you right now, it's a sort of investment strategy for somebody who's interested in investing long term to figure out how to buy or sell a particular stock. And one of the things that I'm going to do in the next few videos is exactly that. I'm going to talk about different stocks and how to look at these analysis in a simple way. Okay? But basically, this right here are signals to sell. These are signals to buy. This is super easy sell signal right here. It's maddening how quickly that happened. And then as you reach this bottom, which I mentioned again, are usually flat. Okay? Then it seems to be entering this channel here. And this is a potential bullish signal. All right? Well, I hope you like my video today. I'll set up a few more videos with more things on the graphs, and we'll keep doing this. So remember that if you like my videos, please like the video and also subscribe to the channel and share if you think somebody else could benefit from this. Well, thank you very much for joining Professor Choi today, talking about these graphs. Have a good one.